Welcome to Alpha Insights. I'm Riley. Today we've got a big week in semiconductors to unpack, and joining me is Matt, who follows the data center and photonics supply chain closely. Matt, great to have you.
Thanks, Riley. Good to be here. And hey, everyone, remember, if you have questions as we go, you can ask us at stockalpha.ai.
All right, big picture first. Two of the largest data center semiconductor names posted surprisingly strong results this week. What did their reports actually tell us about AI spending?
So, the real question here is whether hyperscaler spending is slowing or actually compounding. The short answer is compounding. Marvell and Broadcom both beat, and crucially, Marvell gave a first-quarter revenue guide of $2.4 billion, well above what the street expected. That kind of guide is a structural signal, not a one-off.
When you say structural signal, you mean it's validating a bigger theme.
Exactly. It confirms an optical interconnect upgrade inside AI data centers. Hyperscalers are rebuilding wiring and switching fabric to handle massive bandwidth, and that spending ripples through custom silicon, optical DSPs, and then down into the photonics component market. I mean, when you look at the data, these companies also pointed to design wins and bookings at record levels. That means demand is funded and customers are committed, and that changes how we think about winners.
So walk me through the stack. Where does the real leverage sit for investors?
Think of it as layers. At the top are GPUs and accelerators. NVIDIA is the obvious example. In the middle are companies like Marvell and Broadcom that build custom silicon, optical DSPs, and switches that glue the systems together. Below them sits the photonics and optical engines, the physical parts that turn electrical signals into light and back. That's where volumes and component suppliers live, and where optionality can be the biggest.
So the picks and shovels trade is not just NVIDIA and Marvell. There are deeper plays?
Yeah, that's a good point. The deeper plays include established photonics names like Coherent and Lumentum, networking names like Arista, and even equipment and foundry players like Applied Materials and TSMC. But then below that is a nanocap tier, tiny companies building optical engines and interposers, and those can have huge upside if they capture even a sliver of a rapidly growing market.
Give me a simple example of that upside math.
Light Counting forecasts the optical transceiver market for AI clusters at about $10 billion by 2026. If a small company captures half of 1% of that, that's $50 million of revenue. For a firm with a market cap under $200 million, that kind of revenue can be transformative.
Interesting.
Honestly, I was a bit surprised by this one.
Let's talk about one of those nanocap names that's getting attention now.
Right. POET is a clear example. They build an optical interposer that integrates lasers, modulators, detectors, and electronics on a single wafer-level platform. That can make optical engines smaller, more power-efficient, and cheaper. Exactly what hyperscalers want as they scale.
They sound promising. What's their commercial status?
They've moved into initial production. They had a roughly $5.6 million order in late 2025 and a follow-up production order for 800 gigabit engines scheduled to ship in the second half of this year. They've also partnered with big manufacturers like Foxconn Interconnect Technology and Luxshare to scale production, and they raised $150 million in January to fund the ramp.
So that's the bull case. What's the downside for an investor thinking about POET?
The bear case is real. They are pre-scale compared with the majors. Revenue was tiny last reported. They are burning cash, and yields or qualification delays could derail the ramp. Larger photonics players have deeper pockets, established relationships, and can outcompete on price or integration. Plus, more dilution is possible if they need capital again.
Right.
So, the real takeaway is risk versus optionality. Marvell and Broadcom give you lower risk exposure to a confirmed multi-year build cycle. Nanocaps like POET offer asymmetric upside if they execute, but at much higher risk.
How should listeners position themselves after these results?
For most investors, a core position in the established names makes sense. Marvell, Broadcom, NVIDIA, Arista, plus the photonics leaders. If you want speculative exposure, allocate a small, calculated portion to emerging photonics firms, and be prepared for volatility. Watch execution milestones. production shipments, yield improvement, and hyperscaler qualifications.
Mm-hmm.
And stay diversified across the stack: processing, interconnect, and components, because the AI build-out benefits many parts of the supply chain.
Before we go, can you give our listeners 2 or 3 quick takeaways they can remember?
Sure. 1. Marvell and Broadcom's results confirm that hyperscaler AI spending is accelerating, especially on optical interconnects. 2. The real leverage may be in the photonics supply chain, from established names like Coherent and Lumentum to smaller firms with proprietary interposer tech. 3. If you chase nano-cap optionality, size the positions small and track execution milestones closely.
Great! Thanks, Matt. That was really clear and actionable.
My pleasure. And again, listeners, if anything we discussed sparked a question, you can ask us at stockalpha.ai.
If you have questions about anything we covered today, you can ask us directly at stockalpha.ai. We answer listener questions live. And for more market insights, head over to stockalpha.ai. Thanks for listening to Alpha Insights.